So today I do want to talk about some earnings, and we had FOMC meeting. So that's a week when I'll touch upon some macro, look at what FOMC had to say, talk about a little bit of inflation and job market. Uh, then want to look at some stuff around private credit, some leverage instruments, so on and so forth, and of course a lot of earnings. What else you guys have in mind? Anything else that you may have in mind? Any other topic that interested, found your interest this week? Anything new? Nothing, all good. Markets treating you as well? Any complaints from market?
I put in an order for Rubric yesterday.
Rubric. Uh, what prompted you for rubric? Like, I mean, it's up to you. Like I said, market is paying
Oh
up for
well,
rubric.
excuse me. Jim Cramer said it's way overpriced, but of course that's the same thing with um. Sorry, that it's at 35 right now. I put in an order at 20. Um,
Mhm.
it's kind of like enterprise software. It's kind of like Nvidia. It's something that it's always overpriced. So I just put a low order for it. I don't know if I'll, no, looking at the stock market, I'll get it eventually.
So, so we covered rubric IPO, right, in one of our previous sessions recently after they filed S1, and also after they updated the S1 with the details. So yeah, market is paying up for 5% growth. Market is paying up almost 10 times the sales. Median SaaS sales for 5% growth is like 4 times, right? Um, so yeah, I mean, I'm not willing to pay up for it. I know, like we discussed in during that meeting, they are in transitioning from on-prem to SaaS, so that should accelerate the growth. But I will let Rubrik prove it to me. Generally, whenever you have these transition from your on-prem to SaaS, you will see bumpiness in the revenue, and yeah, I mean, let other investors go through that bumpiness. I personally am not interested. Currently, market was paying up for it at 32 itself. And I think it when it came as IPO right out of the gate, it was what, 35 or something, and it went up to 50. Oh, sorry, not 50, 40, I recall. I don't know where Rubrik is. Yeah, it went up to almost 40. Now it is back to very close to where the IPO was priced.
Uh,
So
like I said, I put an order at 20, and it's enterprise. I can't remember. It's the same as Palo Alto Networks.
no,
Uh,
I mean, I understand they are on the data security side. So they are addressing one part of a security, which is the data security. Cool. All right. Hopefully it will work out for you. What else? Anything? Anyone else did anything? Any new stock that you bought or sold?
I had sold a call option on snow at 55 and it went against me. So I've rolled it up. So we'll see what happens.
Snowflake.
Yeah. I'm bearish
155?
on it. I'm bearish on it. So I had sold it when it was down in the 40s or something. I sold a 55 call spread and it went up to 59. So I rolled it to, I don't know, I think another week out. So we'll see what happens.
Yeah, I mean, if you sold a call spread, then you're probably not gonna you're not gonna lose, but you'll have opportunity cost for the width of the spread, and then you're gonna ride the uh,
Precisely. Yeah.
ride
Yeah.
it if it continues to go high. Yeah. Yeah.
Yeah.
So
So I rolled it and we'll see what happens. Wish me
will you
luck.
able to get a credit during the roll?
Yeah, yeah, about $100. So,
Okay. Yeah, makes sense.
hmm
Yeah, that makes sense to roll it out.
yeah.
Still, still stay in the game and be able to participate longer if stock continues to go high. What
Yep.
else? Cool. Thanks for sharing. Anyone else tried something new?
Hi, my name is Anthony. I am fairly new to stocks and investing. Um, I do have a Robinhood account, and I have a few things that I invested in. I have a couple of shares of Avalanche, um, Dogecoin, and the Shiba coin. I also have GoPro and Cost Energy. Um, what do you think about those stocks?
So first of all, Avalanche, Dogecoin, and Shiba, those are the crypto. They're not really. I think you just misstated there. So those are the crypto assets, not really on
Yeah.
the stock market. And of course, all three of, I think Dogecoin and the Shiba, those are just driven by momentum. And those are like equivalent of our meme stocks, right? Almost have no value. Doge will jump up whenever Elon will post a dog image. I don't see any work really happening in those ecosystem.
Okay.
Avalanche had been trying to become an alternative to Ethereum, but so are the other ones like Cardano, so is Solana. We've seen Cosmos, EOS. There are many challengers to Ethereum. Avalanche is one of them, and I think it's anybody's guess where Avalanche will go, right? Because right now I've not seen any of those Ethereum challenges actually pose a real challenge, except Solana. That too briefly, because Solana had its own problems of um, the network going down. So if I were
Hmm.
to look on the crypto side, I will look for the winners rather than trying to pick this lottery tickets. Yeah, Shiba Inu, Dogecoin could be lottery ticket if Elon goes to SNL and pump up Doge. Yeah, we may end up making some money, but me personally won't be putting in big amount of money in the lottery ticket. So
Okay.
yeah. And related to your others, GoPro and which the other stock you mentioned?
Give me 1 second. It was
Yeah.
GoPro and Cosmos Energy.
Cosmos is again, I think that you may be referring to that blockchain. Sorry, Cosmos is a crypto asset. So GoPro have had its, I mean, it used to be some favorite stock for many investors, especially retail investors, because the product was amazing. But it turned out to be, one product company. There was no act two for GoPro. So I'm looking at, and I've never invested in GoPro, but I'm looking at a two 1 billion sale, and it's like income of negative 53. It just doesn't interest me. And let me
Okay.
just look at GPRO. Even if I just look at, and it's not a company that it's a startup company, and it's been around for some time. Have never hardly any operating margins, either in low teens or never had. So as a business, I'm just not interested in this one. Could it
Okay.
become a meme stock and suddenly, someone try to pump it up? Sure, but that's not how I'm gonna, invest my money in it. So bad business to be in.
Okay.
Almost no revenue growth. I mean, its revenue is declining. So only thesis, if you may have around this, and I don't know if you do, is maybe someone will come and buy it out. Just like Google bought Fitbit, maybe
Hmm.
some company will come and buy it out. But then I mean, those are just my figment of imagination. We really don't know, and I can't invest based on that thesis. Again, lottery ticket, if someone buys it out, maybe it'll 2x, and I have no idea, but that's a lottery ticket. So
Okay.
yeah, no, yeah, this is a stock I won't touch it.
Okay.
Cool.
All right. Thanks.
All right, thanks for joining, Anthony. Yeah, so I think, like you said, you are new, and maybe I see some. Is there anyone else joining for the first time?
Hi everyone, this is Komal here. I'm joining this meetup for the first time. I have not been actively involved into options trading or short-term trading. I usually invest long-term in good companies, but I want to learn more about options and how to do the trading and stuff. So that's why I thought it would be interesting to get on this call and meet some like-minded folks.
Cool. Welcome. So your 50% objective will be met, which is like long term. If you're looking for options for doing short-term trading, that unfortunately you will be disappointed. So at least the way
Okay.
I look at is all investing is long term. Great companies use options to stay in the game for long term. So options are,
Okay.
I don't do options for day trading or swing trading or for a weekly premium harvesting.
Got
So
it. So
it's
you
it's a
buy like long options
I
like
never I don't buy options.
okay. Okay. So you also buy long-term stocks then.
Yeah, majority is it's a stocks. I only sell options to reduce the cost basis of stock so that I can stay in the stocks for long term. And if a stock goes down 10%, 20%, I don't have to worry about it because I already reduced my cost basis by 50%. And hence, I can just hold my stocks forever. So, okay, so a couple of new folks. Yeah, so the way at least, I started this meetup was almost now 4 years. Started with a couple of friends, and it's always good to talk to other people, about investing. Otherwise, investing is a very lonely business. My focus is to buy the best businesses that I can find in public markets and own them possibly forever, right? Or until until my objective is met. If I bought some stock to go on a vacation and then I need to sell it for a vacation, yeah, that's a good reason to sell, right? Otherwise, I would just want to evaluate the business, and as long as business is performing, hold it forever, right? I don't care if the stock goes down 10%, 20%. If the business is still good, that's probably I'll be happy that the stock has actually gone down because then I can buy more at a cheaper price, right? So that's on my investing side now, and I completely understand, Komal, where you are coming from is whenever you talk about options, generally in the media and in the general, I would say investing community, it is thought as to be a short-term, quick gain, swinging for the fence kind of instrument, but that's not what I use options for. Maybe I'm in a minority, but I use options to reduce the risk or not swing for fences and help me in building and holding my best stocks forever. So, and that's what I'll probably talk in that manner. So, like I said, you want to learn about options? Great. For short-term trading, sorry, that's not what I focus on. Okay. All right. Who else? Anyone else new here? No, I think.
So Vivek,
Mhm.
before Amazon earnings on Tuesday, I bought the calls. I know you don't buy calls, but I wasn't sure how market's gonna swing. So I bought the call long term, so it expires in like December 2026.
Yeah.
In premium, I'm already making 10%. What do you think about that strategy?
So was that deep in the money? So
So the strike price is 220. And
220. So that is like way out of money call, right?
way out of money, exactly. And the premium I paid was like $30.
Mhm.
But right now it's already at like 33 or something like so 10% higher than what I paid.
Yeah. So again, I can't give you individual advice, but if you, let me put it this way. So how much is again, we have not covered the concept of extrinsic value, etc. In our boot camp yet. But if there is too much of an extrinsic value in that, then basically you're paying up for you're paying up for the time value, right? And if that has worked out for now, if I were in your place, I'll close that. And if I'm bullish on Amazon, if I were to buy a call, which is 2026, then I would rather buy a deep in the money leap call, which is basically better use of capital instead of buying the stock.
I see.
So the only time when I actually will buy the call will be instead of using capital to buy shares, it will be a better use of capital from investment perspective is to buy deep in the money. Means not out of money, but I'll go to 80 deltas, 90 deltas and buy a call there because that will almost replicate how the stock would have behaved, and I don't pay for time value. Okay.
I see. Okay. And when you say close the contract, that means selling
Just
the
sell,
calls.
yeah, yes, just
Just-
sell it back. Yeah, you could sell it back. And then if you're still bullish on it, maybe sell a put
I see.
against Amazon, right? Maybe sell a put for June. So that
Okay.
at least if Amazon doesn't move in your bullish direction, you at least have some buffer, some safety buffer, some error for margin. If you buy a call, you have a zero error for margin. Rather, you have a hurdle that stock needs to cross.
Right. Okay. Thank you.
Cool. Ross, do you trade covered calls? Yes, I do. Yeah, okay. Ramesh has already answered. Yeah, sell puts both. And I do a lot more also. I'll sell strangle, straddle, iron condor, every other strategy in the world, as long as it helps me to reduce the cost basis. And in some cases, like when the VIX is like 16, and I think in the last 2-3 weeks, I've done purely premium selling trades as well. Anthony, what are covered calls? So Anthony, I'll point you out to, anyway, I'm gonna talk about a boot camp, and so hold on to your question. Hey Johnson, it sounds as if you don't dollar cost average when deploying cash, but you buy a stock, you favor and then sell calls and reduce cost basis. So I will dollar cost average. So as long as the stock overall position is still below my maximum limit. And I think I was talking to someone is that when I start deploying cash into those positions that I want to hold, I will probably go to 2% or 3% of deploying that cash in the stock. Beyond that, I want stock to work for me. So as long as, let's say, and that 3%, let's say if that means $1,000, yeah, my first trade would be maybe for $200. And then if the stock moves up or down and I find opportunity, I'll put another $200 until I reach $1,000. Right? So that's where that period I'll continue to maybe do a cost basis, and then in during those period also, I'll be selling options to reduce the cost basis. But once I have reached the maximum threshold of my capital deployment into a stock, then what do? Right? Then either I just sit around and do nothing, and be dependent on what stock does for me, or the other is, can I squeeze some more premium and continuously reduce the cost basis, which is what I focus on. I hope that answers the question. All right, let's get into today's session. Yeah, if you have questions, feel free to put it in the chat. How many months to expiration? Hold on, I think it is the next bootcamp session, not this Wednesday, but the next one, where I'm gonna talk about the checklist. So hold on to there. Okay. Quickly answering that question, it is generally 60 to 30 days to expiration. Okay. But there are times when you may have to go out, like I was talking about leap options, when you go way further out, but the objective of that leap options is different. 30 days, 60 days option selling is different. Deltas again different depending on what I want to do with the stock. Okay. All right. So hold on to these options related questions specifically, because we do have a separate session focused only on options, where we get into the details of options and mechanics of options. I'm going to talk about that. And we'll get into all deltas, thetas, gammas, and all that stuff. Okay, all right. So let's get on with today's session. As always, whatever we discuss here is only for education. Please, it's not a financial advice, tax advice, and yeah, you have to do your own due diligence. You can always borrow ideas from me, but do your homework so that you can build your conviction before you put your capital on that idea. Okay. Okay. So let's look at what happened this week. We had a FOMC meeting. Jerome Powell, and as always, after the FOMC meeting, Jerome Powell came and talked about, gave his regular speech, and then he answered questions from the press. So a few things. Going into the FOMC meeting, market was prepared for more hawkish Fed, means more restrictive policy from Fed, and which was surprise. I mean, we didn't get that. Fed was not that restrictive. So what did we hear from Jerome Powell? First of all, no change in the Fed funds rate. This was not a surprise. Market wasn't pricing in any change anyway. They also noticed that there is a lack of further progress towards 2% inflation objective. Not good for the stock market. He also got a little animated when there was a question about stagflation, and there was a kind of a mic drop moment where he says, I don't see the stag or the flation, right? And stagflation, as I think when maybe 2 weeks ago, when we had a GDP number, in that time market kind of was a little more volatile and fell down because there were a little bit fear of we may enter into stagflation, right? Which is worse situation to be in which you don't have economy growing, but you still have a persistent inflation. So you're basically like getting squeezed from both sides. And I think there was a question raised by press on if the prospect of stagflation, and I think that's where the Jerome Powell says, no, I don't think that we are seeing any stagflation. I don't see the stag, or I don't see the inflation. And core inflation, if you look at the chart, is still sticky. And this is where it's, went little up. I think now annualized basis, core inflation is hitting kind of a 3.7%, which was in a Q1, it was like 2%. So that's where we are right now. A quick summary was a broader. So even though there is a lack of progress towards inflation target, the broader economy, labor market, and inflation is moving into a better balance. What else? Winding down of QT. Okay, so this I think is more important. Powell said that it was unlikely that the Fed would need to raise the interest rates. So some of these comments from Fed, these were less hawkish than what market was priced in or what market was expecting. And hence, after the Powell speech, market actually rallied. It is similar, like it is bad. It's not. It's better than the expectation. The expectations were worse, and Jerome Powell did not go all the way down to being being a hawkish. So that's fine. Economy added 175,000 jobs. The job report came out on Friday, and which was too less than the expectation was 240,000 new payrolls. So bad job market loves it, because that means if a job market is bad, people will be making less money. You'll have inflation may cool down. That means Fed will probably start to cut rates sooner, and that means we'll have more liquidity in the market. That means the stock price will go higher. So unfortunately, bad for economy from jobs perspective, sounds good for the stock market. So overall summary, market loves the less hawkish Fed, and market also liked that the job market has started to weaken. if job market continues to stay strong, wage growth continues to stay strong, then it's very difficult to bring down inflation. Right? If you continue to have your job and you can negotiate higher and higher salary, people won't mind going out and spending extra or paying higher prices. Right? If people are continue to pay higher prices, companies won't be reducing the price of their goods, right? So that's the reason stock market doesn't like strong job market. So at least for this month, the April, we got a weak job reports, which market liked, and I think Friday, that's why we ended up green on Friday. Not that it matters. 1 week matters in the long term, but yeah, I do want to look at on the week when the FOMC meeting committee met. I'll see what happens in the market from macro front. So from a sector perspective, communication services still continues to lead the pack, and real estate continues to be the worst performer, and S&P is up like 7.5%. And if I recall correctly, I think last week it was like 5.5%. So we almost gained 2% in a week. So now what we are done with 4 months, 1/3 of a year in 7.5%. Now that seems to be, in range. I mean, I was really, I would say became a little pessimistic when we were up like 10%. That was like too much too soon. Now I think it's good to see these corrections happening in the market. Some of that froth is being taken out, which is I think is a good from long-term perspective anyway. What drove some of these gains? The biggest, I would say the second biggest market cap, Apple, is up 8% for the week. Right? It's already a more than $2 trillion company. Did it hit back 3 trillion or is still 2 trillion? Where's Apple? No, it's 2.8 trillion. Right? So when a big juggernaut like Apple moves 8%, of course, S&P will move along with that. And then also saw Amazon up almost 3.5% because Amazon had its earnings. Tesla moved up 7.5%. After Elon Musk talked about last week that the new car, so the cheaper car project is not shelved. We will see it, and then something will come up on robo taxis. So market love that. I think Qualcomm was up almost 8%. So, and yeah, the bunch of these earnings, less hawkish Fed, bad jobs report, good day, or I would say good week for the market. Yeah. So that's on the market side. Now, depending that, of course, not everything in the market had gone up. There are stocks that would have performed, worse than the market. One that comes to my mind, and I think I've seen a lot on the media also, is Starbucks. Post earnings, I think it's down 16% or something. It's trading now at, I don't know, I don't own Starbucks. I used to, not anymore. Is now at $80, $73. Oh, finally, yeah, it fell down, whatever, from almost 88 to 75. Again, they are seeing tightness in consumer spending. Similar thing that McDonald's had mentioned. But of course, I mean, if you start charging $6 for a coffee, at some part of a time, consumer will say, okay, I'm done with it. Or instead of going for all 7 days on a Starbucks, maybe I'll go for 3 days. Another 3 days, I'll make coffee at home. So yeah, Starbucks didn't do that good. But anyway, I think overall the market was still fine. So if you are invested in overall market, which I guess if you're not interested in reading the earnings report or press releases or 10Ks or 10Qs, then no business in doing it, in staying in individual stocks anyway. Then the best option is maybe pick up these SPYs and QQQs, and those were good for for last week. No complaints about the market. What else? Interesting stuff that I saw was on the Japanese market, and there was a huge swing in yen versus dollar. So at some point of a time, I think it was maybe Friday or something, yen dropped like 160 yen per dollar, and then quickly it also recovered soon. So there's a lot of, and like these are currencies, right? These currencies are not supposed to move at such volatility. These are generally slow moving instruments. There is a lot of money that plays in the forex market, and these huge swings can actually kill some of the houses that have placed bets and many times leverage bets on currencies. So there's a lot of speculation around what the heck happened. How did it recover? Did the Japanese, basically BOJ, Bank of Japan, intervened in the forex market? And I think they did. I have not yet read, but I guess the news is out on it was on Bloomberg or one of these, which details out the intervention by Bank of Japan. But on the day when it happened, the market was like, what did we see suddenly? How come the yen had such a huge swing on a few hours basis? So the yen is now down, what, 10% against US dollar for the past year? So if you're looking to go on a vacation, Japan is a good is a good destination. And 27% over past 5 years. So anyway, dollar has been losing its purchasing power, and now the Japanese yen is losing even more. So and then I guess no wonder Kyoto is seeing what you call over tourism problems. It's a good time to visit Japan. The dollar goes a long way in Japan, or I guess even other currencies also, which are stronger than yen, and yen has depreciated against it. So twice this week, the yen spiked against dollar, and BOJ purchased yen in an attempt to slow down the bleed. I don't know how long can they continue to slow down the bleed, because if you really look at the Japanese debt to GDP ratio is now 200%. They continue to borrow, and how you going to pay for that debt is you just print more money. And then basically you print more money, that is a deflation, basically inflationary for your currency. You just inflate and devalue your currency, and just kick the can down the road. That's all we're seeing. And so I'm really, feel for the people who have to go through this in Japan. And we're not talking about any third world country or oppressive regimes where we see inflations in triple digits, right? This is like developed country. Now this is what now the third largest GDP, or did Germany take it over? I don't recall exact number, right? But I know US, China, I don't know, third is Germany or Japan, and then the fifth is India. We're talking about like even as a top 5 GDP country, and they're seeing such of a devaluation in their currency. It's all because of the debt. And if you go back and look into the history of empires, one of the, I think, good book is from Ray Dalio's The Changing World Order. And these changes don't happen all of a sudden. It takes a few decades, and these are over a century. But every time the empires have changed or the world order has changed in terms of which country now become much stronger is, the changes happen when you see these, debt has, the countries that leverage themselves up to the nose, and that has caused most of the time that's a cause of a downfall of that currency or for that regime. Now, Japan's GDP, debt to GDP is like 250%. So I don't know what's going to happen. Hate to see this having, happening to a developed country, but if that's how the politicians and your bankers will behave, which control the currency, there is no escape route. Or maybe let me put it the other way. I think the Bitcoin maxis will say there is only escape route is Bitcoin. Gold maxis will say the escape route is go and buy gold. You pick up whatever you want to, but it's not. I mean, these things are happening in developed worlds also. So this is not some poor country in Africa that has been inflating. This is we're talking about Japan. Anyway, let's talk about what's happening on China. Chinese, I think we did talk about it when I looked at a gold. Who's buying gold, why they are buying. We addressed 5 W's of gold, right? Who, why, where, when, and what are they buying when it comes to gold. But I think last week I saw an article maybe in Bloomberg or some other magazine in terms of Chinese consumer and the government buying gold. So together they bought 308, almost 309 tons of gold in first quarter. And that's why we're also seeing gold is up like close to 2,400. Gold represents the only safe asset for Chinese consumers to protect their wealth against domestic inflation, asset price declines. What's happening in Chinese real estate, right? So Chinese stock market is not, the capital market is not as well developed as in US, though it is coming up fast. You don't see a lot of international capital in Chinese market, especially definitely last few months. The capital actually has flown out of Chinese market, and the property prices have crashed. We have seen a lot of bankruptcies in those property developers. So majority of the wealth of Chinese investors was tied in property market. And if that is not performing, the other asset is buy gold. So I think traditionally, or from a, what should I say? The same is the behavior that I see in India. The countries both, where you don't have that great, well developed capital market, property and gold are generally ways to store your wealth. So that's why we see Chinese and Indians, they love gold. They love their gold. Not just a Chinese consumer, central bank bought 160,000 ounce of gold. And in March, which was like 17th consecutively monthly purchase of gold, net purchase of gold. And the reason is they want to diversify out of our US Treasury bonds. So China has been selling and reducing down their holdings of US Treasury and buying gold as a part of their reserves. So that was a quick story on gold. I see a question. Okay, so Leo asked, can you repeat reasoning why you say stock market like weak job market? Isn't it a factor of how much employment add to productivity of business? See, so stock market, when I say on a daily movement or on a short term, is looking for gets high on the Fed liquidity. So if Fed reduces the interest rates, that will bring in more liquidity into the market. And why would Fed reduce the interest rate? If Fed starts to see that there is a weakness in economy. Why a weakness economy will come? If the job market starts to break. So that's why the stock market loves when you see a weakness in job market, because that raises the prospects that I'm going to get my drug dose from Fed. Long term, Is a bad job market, great for the stock market? If you look at, let's say, 20-year, 10-year period, no, because we need to have a, good job market will be good for economy, and if stock market over a long term is a reflective of how the economy is doing. But when we are talking about 1 year or period, which is, I think the street looks at a quarter to quarter basis, and most of the traders looked at on daily basis, on a weekly basis, that's where the relationship breaks, because then I'm looking for a quick dose to my, dose, or yeah, or whatever, a quick shot from a Fed to get high, and that is like Fed trying to inject liquidity. And that is why you see, whenever you see that there is a weakness in economy, majority of the time, I love when bad news for economy is a bad news for stock market. But I haven't seen that in past 3-4 years, because bad news for economy means Fed is going to become more dovish. They're going to flood the market with easy money, and that money finds its way into the stock market, like it did in 2021, 2020. Market, the whole economy was shut down in 2020. Why did stock market go high? Economic growth was zero. Technically we went into recession in 2020. But the stock market went high because we had a liquidity injected by the Fed. And now the market loved, basically that market tasted that blood and is waiting for the same kind of a blood from Fed. That's the reason. Rich Singapore investor says Chinese stock market has risen over 20%. China stock market was on fire last week because of better than expected GDP report from Hong Kong. Right. So I think it was like way better than what was expected. And look at Baba, look at KWeb. Let's look at those stocks, right? And not even individual stocks. So if you look at individual stocks, Baba close to 68 all the way to 80. JD. I mean, I see this across all the Chinese equities. PDD. What else? I think even the EV car makers, they all did fine for $4 all the way to 5.5. Let's look at internet ETF. KWeb, 26, 27 to $30, right? The China large cap ETF. Right? So Chinese market was on fire for this week, but still, I mean, it hasn't recovered. This, like, 2023 has been one of the worst year for Chinese market. Chinese market has been one of the worst performer across the markets in the world, but it had recovered a bit.
Vivek, concerning 2020, everybody says it's a recession, but the stock market, it was a V-shaped. It wasn't prolonged like in 2009, 2008.
Yeah, because we got Fed printed what, $4 trillion, right? So that
So
money,
of course the recession, if it wasn't 2 quarters, it was like one quarter. It was a V-shaped.
yeah. So different. Recession is on real economy. Stock market is different. So we did have a technical recession, which is 2 quarters of negative GDP growth. And that remained only for 1 quarter, and then afterwards, we had a positive GDP quarter growth. But in any case, I think the point that I was trying to make is economy was shut down, and the stock market was on fire in 2020. So they don't always move in tandem. Definitely in the short term, they don't move in tandem because market goes up or down based on other factors than a strong economy. Supul, isn't debt to GDP ratio probably even more applicable to US? Curious why US dollar is getting stronger. US dollar is the cleanest cloth in the dirty laundry basket. Yeah, Jay already answered that, right? But that doesn't mean that dollar is cleanest. So if you look at dollar per se itself, the purchasing power of dollar has been going down. It's been going down, right? Vegetable, oil, meat, eggs, dairy, all prices have gone up. Or you can say flip around the narrative and say the dollar has become weaker against everything else. But all other currencies are even worse than dollar. So dollar is bad, others are worse. So can you comparatively say dollar is good? Yeah, of course. So I think that's what we are seeing. All right. So I'll skip AI hype. We're already 10:50, so I'll try to speed it up a little bit. Fear and greed index, still in fear. I thought maybe after Friday, the index should move to at least neutral, but it is what it is, right? What's happened on the crypto side? Uh, uh, I straddle into both worlds, the crypto as well as the you call a TradFi world, right? So I'm not 100% tied to only one side. I know, this is a very passionate subject. Some investors on cryptos are like hardcore crypto. They hate TradFi. They are maxis. I'm not maxis. I am just rationalist, right? And if there's an opportunity for me to grow my wealth or protect my wealth, I'll straddle both sides. So let's look at crypto side. What happened? Bitcoin dropped below 60,000. And I think after 7 consecutive months, we had a first red month, which was April. And whatever. So it was here that it was below 50. I think it was just close to 57. That was the last price when I noticed. And what else? Risk asset across the board have been down during the same period. And the reason is the same time Bitcoin is still being considered as a risk asset. And when you see markets become a little more risk averse, when you see yields on treasuries going high, we see stock market, especially the growth the growth stocks going down, and then also see some of these speculative crypto assets going down. So nothing different. The markets were weak, so was crypto. But it recovered at 58, and I did not know this until I found this information. So 58,000 seems to be the cost basis of the short-term holders, means those who bought it at 100 and less than 100 and held it for less than 155 days. Their cost basis was 58,000. So as long as Bitcoin stays above 50, so that's basically is a support for Bitcoin. If it crashes through the support, and those who are more TAs probably can explain it much better than I would, but if it crashes through the support, then we may have to worry about it. If it bounces back on support, then we'll have to see what the next resistance is. So, but in this case, it beautifully bounced back at 58, and I think now where it is. Let's go to CoinGecko. Now it's back to 63. Okay, not a big deal, but what else? US spot ETFs had outflows. So these were one of the IBIT specifically is one of the most successful ETF in the history of ETFs. And considering aggregating all the ETFs, now they had another week of outflow, which is fine. I mean, we had almost $50 billion already, and these ETFs are not even 3 or 4 months old. So at some point of a time, especially now you have traditional investors into this, institutions or hedge funds or family offices into this. This may move more like how your traditional finance moves, right? If there is a weakness, it's easy to sell. You don't have to move your coins to your exchange and all that. You have an ETF, you're on your trading platform, you could just sell it and buy it. So I am not surprised that the ETFs had a net outflow. That's on the US side. What happened on the Hong Kong side? East side Hong Kong Bitcoin spot ETF started trading, and I think they attracted $292 million of assets on day one, which is huge considering the size of overall ETF market on Hong Kong exchange. 292 million when you talk about US is, is pittance. But when I talk about the Hong Kong, the overall ETF market in Hong Kong is close to $50 billion or less. In US, it is like trillions of dollars. So $292 million in a spot Bitcoin ETF is a huge deal from a Hong Kong perspective. Okay, so that was, but it's not as big enough to move the needle on the overall asset class. So don't get too excited that now we have a new spot ETFs in Hong Kong. It's gonna go to the moon. Nah, it's a good from a story perspective, good from a narrative perspective, not really something that will move the needle. I see another question. H. Johnson, Charlie Munger hated crypto, but didn't explain to my satisfaction. Yeah, so 99% of the projects or the stuff in crypto is gonna go to zero. Because there is so much of a grift, so much of a scams happening in this that unless you are actually spending time to identify which the projects are, it's a, I mean, I agree with him saying, rat poison square. But let's not confuse and put everything under the same blanket name called crypto. There are different projects. It's like saying, oh, internet is in 2000. You come and say, oh, internet is rat poison square. No, there were companies that were shitty companies, but there were companies that turned out to be the great companies. I think that the trick is, how do you identify which companies have a business models or which company are actually solving a real problem versus which company is there just to take investor money and run away. And when it comes to crypto, the situation is even worse. And the amount of projects that are just here to take investor money and run away are way more than in the internet era of 2000, because it's a market is not regulated. So I'll be very careful. But I won't ignore it. Yeah, but I'm not going to put my emergency fund in it or my kids' education fund in it. So at the end of the day, it's a position size that would matter. What else? Block or Square. We'll probably once talk more about it, or maybe not. I don't know if I have earnings for Block document, but in any case, so Block, formerly known as Square, they're gonna follow on the footsteps of MicroStrategy. I think this is there are a few other companies that have Bitcoin on their balance sheet. Tesla still has. I don't think Tesla has sold any. I didn't look into the latest earnings, but I know prior to that, whenever Tesla bought Bitcoin on its balance sheet, it never sold. Now, Block announced that they will be kind of a dollar cost averaging every month. Was it month or what? Every month, yeah. So Square will be dollar cost averaging into Bitcoin every month, basically 10% of the gross profit from their Bitcoin operations. So as you guys know, you can actually buy and sell these crypto assets on the Cash App. And whatever gross profit that they make, and the amount is, you can go and look into their earnings. They're gonna invest 10% of that into buying Bitcoin, right? So now we see this company start to use Bitcoin as an asset on their balance sheet. And one of the reason is because the FASB rule change is coming into effect. Some companies have already started to recast their balance sheets to account for a new FASB rule, which is, I would say, is a favorable change for the companies. Should I repeat what the rule change was? I know we talked about it earlier. Before the rule was being implemented, I think it was presented and that part as a bill, and that time I had talked about it, saying there are a few changes coming in which will be favorable for the ecosystem. Okay. So today, I mean, prior to this rule change, the way the accounting worked for the Bitcoin was if a company bought a Bitcoin, let's say at $100, okay, and that Bitcoin goes down, let me flip that way around. Let's talk about how the investments accounting works for the investments on your balance sheet. Let's say Berkshire Hathaway. They invest in a lot of companies, you guys know. So for the stock, when it comes to the stock, you have to take the value of stock as mark to market. Means at the end of a quarter, when you're presenting your financial statement, you see what the stock price is. Say I bought XYZ at 100. And at the end of a quarter, that stock is trading at 90. Then I will say I had a loss of $10. Or if the stock is trading at 120, I will say I have a profit of $20. I've still not sold the stock, but I will show it as a profit. And that's why now I mean, Warren Buffett hate this rule. Even I hate this rule because it skews up the net income for any company that has got investments. It has nothing to do with operations. This all have to do with how the stock market behaves, which is like crazy. Right. So that is why if you look at sometimes when I review the results, I'm like, ignore net income because that's a useless for this company. A lot of portion of net income is driven by the stock investment. Anyway, coming back to the Bitcoin. But let's say if you held Bitcoin on your balance sheet. So till now, the rule was that if Bitcoin goes down from $100 to $90, you take an impairment charge. But if Bitcoin goes from 100 to 120, you can't show it as a gain unless you sell it. So the whole idea was that, and that's why we saw in some of the Tesla's quarterly results, they had to take an impairment charge on Bitcoin. So it was like you get hit by it, but you can't take the benefit unless you sell it. The change that FASB rule is now doing is to treat it as a similar to stocks, wherein it will be valued as mark to market. I'm not an accountant. If someone is accountant, can probably explain it better, but this is my understanding. So if it becomes mark to market, then we should see any of those companies who had held Bitcoin on their balance sheet and had taken impairment charges can now go back, and if the Bitcoin is now higher than where they had bought in, can now show the gains coming from that Bitcoin just because of the change in this accounting way. And I think some of the I think maybe Tesla already did it or Square already did it, but some of the companies have started to implement it. And one of the reasons why many companies would not want to have Bitcoin on their balance sheet was because of the previous rule, wherein you get hit if the Bitcoin price goes down, but you don't get the benefit if it goes up. But now, it's a level playing field. So I would see if governments don't try to kill Bitcoin, and then the FASB rule coming into effect, some company CFOs now may be more open to have a discussion on maybe we should put 0.5% of our reserves, because at least, if it goes high, we'll be able to show the gains from those into our P&L, which earlier they were not able to. Okay. So that's a change. And yeah, so it's coming into effect by end of this year. And lastly, on this ecosystem, now the 13 Fs are out. So quick summary. There are overall 4,000, almost 5,000 13 Fs filed. Oh, sorry, let's look at a Q1 2024. 2,100 ETFs filed. How about their GBTC? 214 of them have GBTC. So 155 have other than GBTC, and 214 of them have GBTCs. And the percent of, okay, so 8% of all Q1 filings had Bitcoin on their balance sheet. The funds, etc., they own Bitcoin. And 12% of them actually own GBTCs. And then there's a breakup of, I think the BlackRock Bitcoin ETF seems to be the favorite, like 5% beyond, like top two or three, and then nobody's interested in others. So I don't even know why, how long will these be able to survive? But that's the status. So now we can actually see how the what's the actual interest that institutional investors have on these Bitcoin ETFs, because now they have to declare it in their 13F filing. GBTC expense ratio is very high. Yeah, GBTC is very high. But if you had already held it and it is in your regular brokerage account, if you sell it now, you get a hit by capital gains tax. So I think majority of the folks are still just holding it, and Grayscale knows it. They have had outflows ever since. Every week they had outflows ever since the other ETFs were launched, except I think on Friday there's surprisingly inflow, and I guess the whole crypto market, the folks were like, what the heck, who is buying GBTC, because they're so expensive. My only guess was maybe someone had an automated order that after the end of April, because that's also end of a tax season, go and buy some GBTC, and someone forgot to remove that order. No, I'm just kidding. It makes no sense to buy GBTC right now because the other ETFs are super cheap, but GBTC had an inflow on Friday, which was surprising. All right, so that's on the crypto side. So what did I buy or sell this week? Again, not a recommendation, but we do talk about stocks, so I want to be transparent of what I buy and sell. I bought FBTC, which is this Bitcoin ETF, because Bitcoin was around 57K at that point of a time. And I'm like, okay, I'll pick something. How do we know outflow or inflow for each ETF? Follow the right people on Twitter, Eric Balchunas and his sidekick, James Seffert. Those guys are the best. Those are the ETF specialists from Bloomberg. They share a lot of information. Which ETF for Bitcoin looks good? You can't go wrong with anyone except GBT. I think except GBTC, I would say stick to top two or three. IBIT, FBTC, ARKB, BITB, all should be fine. Now, the decision-making factor would be, which is the number, of course, number one is who is the issuer in this case, like BlackRock, Fidelity's, these are not fly-by-night operators, right? They know how to manage the ETFs. So, and ARK is, they have tied up with 21 shares. So, and 21 shares has been an ETN issuer in Europe way before any one of these come. They have a lot of experience in buying Bitcoin and doing, have all the arrangements of how to get it custodied and everything else. So I would say IBIT, FBTC, ARKB, pick any one of them, whichever has the least expense ratio, and that should be fine. Eventually, I think that there will be 2 or 3 or 4 winners, which will concentrate, all the inflows. So IBIT seems to be on the top. Can you please write down their name or share their Twitter handles? Let me just do it. Eric Balchunas. And I would say the Bitcoin community owe them a lot during the whole ETF approval time frame. They were like giving commentary on daily basis. These guys work their asses off during the weekend to provide us information on what's happening between SEC and each of these issuers, how many filings have been changed and all that stuff. So they are a good follow. Both of them work for Bloomberg. If FBT is in a descending channel, I don't see. Again, I don't care. I don't know, and I don't care. So again, depends on what's your time frame you're looking at. Now, this asset class, which is, let's say, Bitcoin, my time frame is like I talk in terms of decades, not even years. So I don't really care whether it's a descending channel, is an ascending channel. Are we gonna get a short, squeeze, or are we gonna, whatever? Are we in a death cross or in a golden cross? I don't care. But if your outlook towards this is you want to make money in it in next few months, maybe then you should. So I have no idea. And like I said, I don't even care about it. For me, this plays in the lifetime of this plays in decades. And I'm willing to wait until then. All right, that's on the crypto side. Any questions on the crypto side? Is there any DJs talking about some airdrops, etc.? So EigenLayer have had some issues around it, and that's why I don't get into these things. You never know which projects are really good. I thought that was a really promising project, but they screwed up in their airdrop for the tokens and all that stuff. And now the community is crazy and angry. Anyway, we'll not get into the details of that. So a quick update on a boot camp. As you guys know, I started doing this options related bootcamp where we get into the details of how the options work, and many of the questions around what expiration, what deltas, what strategies, why, and so we'll cover into the detail. What's covered call? So we already did 3 sessions, right? Basic intro, and then we talked about cash secured put, then we talked about covered calls and how to do it. Then the latest one, last Wednesday, we talked about in the money, out of money, how does the exercise assignment work? And I already sent you guys the homework. So those who attended it or those who have received email from me, please finish your homework, respond to my email with the submission of your homework so that then we can review it in our Wednesday session. Before we dive into the topic for our Wednesday bootcamp will be option strategies for small accounts. Right? Everyone starts small. I started small. I'm not going to bring in, let's say, $100,000 on day one. I'll maybe bring in 10K. I want to dip my feet in it before I jump head first. So are there any strategies that you can use to limit your risk and still use options, include options in your portfolio management? So that's what will be the focus for our drill number 4. We meet every Wednesday for the bootcamp, for the options related discussion, 6 p.m. to 8 p.m. Pacific time. I already scheduled it on a meetup. So if you're interested, go ahead and register. It's free, but you have to do the homework. Okay. Any questions on the bootcamp? And if you have not attended the prior sessions, please go and review the recording and understand those concepts before you attend drill number 4. These are all linked to one another. Right?
Vivek,
Yeah.
the boot camp is better this year than 2 years ago, because 2 years ago, I started in midway and I was totally lost. Thank you for the homework.
Yeah, midway if you start, you will be lost. And yeah, the last one which I did was in 2021, because I think that was, again, it started in April 2021, and then I went into a job, and doing that along with the job becomes it's a time consuming stuff. So I've stopped doing it. I'm like, either I can do boot camp or I can do Saturday sessions, and then I stuck to doing Saturday sessions. But now I have a time, so I thought I'll do it one more. So glad that you liked it. Where can we access recordings? It's up on my website, and like I also mentioned in email. Let me extract that information from email. Yeah, because if you, you know, come afresh into the fourth drill, then, I mean, like Sam was saying, you'll be lost. Let me post the details here. So it is available, and let me just show you. I just uploaded the third one also. And I know that some of you find it a little difficult in terms of you thought maybe you can just buy some calls and have fun with it. That's not how, if you really want to stay long-term in options, will work. So you come to boot camp and you should be able to access all these three. Right? So that's where it is. So there was a question on what's
Vivek?
the covered call. That's
Hello?
what I covered in drill number 2. Okay.
Are you going to, hello? Are you
Yeah.
going to address at some point option liquidity and specifically what threshold in terms of open interest and or volume one should look for in order to be confident that you're able to buy to close, get out of the option?
Yeah, so I'm going to talk about the liquidity open interest in next session, where we'll look at what's my entry criteria. So when I'm trying to enter into any option trade, yeah, you need to look at how to find that there is enough liquidity. So there is a bunch of, I think there are 10 or 11 criteria that I would run through in my mind before I open an option trade. One of them is liquidity. So yes, I will talk about it. Okay. All right, Supal. Oh, you're very generous with your words, Supal. You're welcome. I just want to make sure that you guys are spending a couple of hours every week, and those hours better be spent well, and I don't want to take it as lightly. So I want to put up my best here and want to make sure that you get benefited. So, and I learn along with you guys, right? So it's a win-win. Okay, those who attended, if you still have any questions related to what we have already covered, submit in the Slack channel. And otherwise, yeah, then I'll be able to answer your questions Slack. If I'm not, then I'll address it during the bootcamp. But because a bootcamp is like, I just want to make sure that I finish with the topic of the bootcamp. Sometimes if you have a question, we may not even have time to go through it. But if you are able to ask me in the Slack, I can answer it throughout the week, right? You don't have to wait for the Wednesday session just because you have a question that you want to ask me on what we talked about in option bootcamp. Okay. Again, I'm deliberately doing it slow, one topic per week. This is very different from some of the conferences that you may go to. You'll spend 2 hours in trying to, get drowned into the option concepts, and then you come back and then you say, gosh, what did I learn? How do I now start at a step 1? So deliberately I do one topic a week, give you homework so that you can go and practice it. And if you don't do your homework, if you don't submit the homework, then a year later you will still be at the same place where you started. So guys, that's the reason. I'm not a sadist. I don't enjoy troubling you, by homework. It's for your benefit. Just do it in a paper trading. Okay. All right. Portfolio pizza. As you guys know, at the end of every month, I come and share in terms of what I hold in my portfolio, just to be transparent. And so this is the first session after end of April. Here's what the pizza looks like. I'll give you, nothing has changed though. End of March, end of April, except I guess Google and QQQ, they switched places. Else nothing has changed. I'll give you a minute to look at the portfolio. If you have any question, ask me. Otherwise, we're gonna review this pizza chart after next month. I share it at the end of every month. Or if you're following on Twitter, yeah, you will see this pinned onto my profile. Cool, no questions? Did you buy anything during the April downs? Every time when I buy a stock, I come and share in this weekly presentation, what did I buy or sell? Now, yeah, of course I bought. Like this week I bought FBTC. So whatever I bought last week, I would have already shared what I bought last week. Why you have such a large portion on SPY? Because this is the ETF which is, has the best top 500 companies. However good I think I am in analyzing companies, I could just be 100% wrong. And the company's leaderboard keeps changing after decades, right? The top 10 companies that you see in the stock market today were not there 20 years ago. Those are not the top 10. Right? Where are the Exxons of the world? Where is the GE of the world, right? They are no longer leaders. So the leaders that we have today may not stay as a leader 20 years down the line. So how do I make sure that I always stay invested in the leaders? I'll just pick SPY. And I think SPY will continue to be my biggest position. That's why I have a large portion on SPY. The change in percentage due to change in stock price, or you bought more? It could be both. Number one, the stock price would have changed. Maybe I would have bought more. Like say, Melly is 5.01, and I'm sure today, if I look at Melly has increased because, after the earnings, the stock was up like 8%, right? And maybe Apple would have increased too, because Apple on Friday was up. So this is as end of April. And also, maybe if I had cash or less cash, so it's basically overall portfolio, current mark-to-market portfolio on end of April. SPY to VOO. Or you ask me, am I going to move from SPY to VOO? I am not. The reason is because VOO is not optionable. SPY, I continue to sell options, or I can, sell calls against SPY just to reduce the cost basis or hedge my positions. I love Vanguard. So if you're not into options, Vanguard's ETFs are the best ones because they are the cheapest. The reason why I don't pick equivalent of Vanguards is because I want to reduce cost basis, and Vanguards are either not option. I wouldn't say not optionable, but the liquidity is so bad that is almost worthless to do anything. I don't know VOO. Is it even optionable? It is optionable, but the bid-ask spread is, look at the bid-ask spread. $3 wide, right? Oops, it's 16 Jan. Let's go to the 21st June. 40 cents wide bid-ask spread. Let's look at SPY. 21st June. 4 cents, right? So that's the reason why I choose SPY over VOO. If possible, can you please share what someone can start from here, like what stocks are the best to get started and these stocks are rightly valued? The stock right for me may not be right for you. And time to time, if I find an opportunity which I say, I think it is undervalued, I do come and share. I looked at PayPal, I think when it was 50s, and I said, hey, I think it is undervalued. And we talked about it 2 or 3 times, and I built position on it. But again, I am not always hunting for more and more undervalued stock because I have enough takers in my portfolio. I don't want to go far or too thin and spread myself so thin that I can't track what I own. So, but if one of the stocks in my portfolio, I find that it has been punished unfairly, and it's a, I would say, momentary dislocation in the market, I'll go and add position, and then I'll come and say, okay, I bought this. But again, what I buy may not be right buy for you because you may already hold it. I may have a like 5-year vision for it. You may want to get profit from it in the next 6 months. So it's a very different. That is, and unless you actually study a stock, I would say best is stick to ETFs. Otherwise, I might end up making money and you end up losing money on the same stock. Right? So our percentage here by cost basis, no, these are not cost basis percentage. Though I do track my cost basis percentage, but these are as of value. What is the expiration duration for you buy for SPY? First of all, I don't buy on options on SPY. I only sell. Only buy will I do is will be a part of a larger. For example, I have a collar which I did in SPY at the end of 2023, in which I sold 500 or 505 call and I bought for something 400 call. So that 400 put. So that is a collar I did as a hedge. But now there are like SPY, QQQ are my instruments to hedge a portfolio. Those are even I will, because now I can devote a lot more time on this one. Those I would rather do maybe every week I'll have a trade. And these are very liquid. You have a weekly expiration. So if I were to adjust my deltas, again, I'm getting into the stuff that I've not even covered in the bootcamp. So you may question, okay, what are these deltas you're talking about? So I look at my portfolio beta weighted deltas and I see I need to control these. I use QQQ and SPY to control these. So expiration duration will be, I have a 10th May, I have a 17th May, XSP, which is your mini SPX, and that is more tax favorable than SPY. And then same thing on QQQ. But those are just hedging positions, right? So there are some options which I'll do only for hedging the portfolio. There are some option trade which I'll do to reduce the cost basis of my long-term holdings. And third one will be just to harness the option premium when market presents opportunity. And almost none of them will be, or maybe 0.5% or 1/4%, maybe some lottery tickets. Very rare though. Okay. How do you manage overall exposure to equity? Like I said, right? I do hedge my position and look at what's my overall delta that I'm comfortable with. And I always want to carry some decent amount of a cash position. So this decent amount of a cash, so 9% earns nothing, or maybe earns a, let's say, T-bill rates, but it helps me to sleep well. Number two, I also try to hedge it. Right? So I have a, let's say, hedges on QQQ. I have a short calls on QQQ. I have a short calls on SPY. I have a collar on SPY. I have a short call on call spreads on NDX. So those are, if the market goes down, those will benefit while my equity positions will go down, like standard portfolio hedging. And if the market goes up, I may not benefit as much as if I would not had that hedges, but there is no free lunch, right? So right now I'm focused on losing less and not trying to hit for the fence. Guys, we are already up, what, 7.5%? And my portfolio has done better than that. And I just want to make sure, guys, if I don't make too much, if it continues to go higher, I'm fine with it. Give a percent return you aim for in selling options at an individual option trade level? Yes. And we're going to talk about those percentages where you set your exit level. when we look at exit criteria for option trades. Depending on what strategy it is, for a straddles, it will be, I will be happy to take anywhere between 25 to 35% of max. For condors or for strangles, 60%. Yeah, so there are individual at a trade level. Depending on a strategy, I do a percentage target. Now, overall, do I have a target that for I need to make so much percent return by selling options this year? No, I don't. I'll be very happy to lose on my option trade because then it means my long portfolio has gained a lot. 2022, I made a lot of money in options because the long portfolio had gone down on all the hedges and all the covered call selling worked out great. So I look at it as an overall portfolio, and that is why you should, I mean, I don't go by anywhere who say, okay, I made so much on options. Guys, what's our overall portfolio? Options is just one part. So I don't aim for a return on option portfolio. I aim for a return on my overall portfolio. Do you have multiple accounts for investment, swing trading, using cells, etc.? No, I have only one is, of course, the retirement accounts. And then I have two accounts where I do everything. Long-term buys, I mean, all my long-term buys and then selling options. I don't buy stock to swing it after 2 months. I buy stock because I want to hold it for long term. Maybe once in a while, I don't think this year I bought anything which I have with the intent of, okay, I'm going to sell it in the next 6 months because now it is doing golden cross or whatever. Right? I don't think this year I've bought any stock like that. So I'll buy a stock forever with the intent of holding forever, but yeah, then use options to continuously reduce the cost basis. Okay, all right, let's continue. And if you have questions, put it in. Maybe at the end of a session, I'll address more. What else caught my eye? Investors are reaching for yields. And I know that the issuers are also reaching out to investors. I got pitched by a fund trying to sell me some get me into private credit. Yeah, so I did tweet about it. And even if you look into the market, you will see there are a lot of funds now coming up with these other ways to invest. Either it's a private credit or giving you exposure to, let's say, pre-IPO companies. Right? ARKK is doing it now. You can buy ARKK venture fund, right, on, I guess, on SoFi, and they actually invest in venture companies. Right? So you don't really have to buy, let's say, illiquid shares from the secondary market. You're actually buying a stake in a venture fund itself. Now you're seeing private credit blowing out. Right? Why all these? Because people are looking for, they're hungry for yields. Number two is the number of companies being traded in the public market has been going down. It used to be close to 9,000 companies 30, 40 years ago. Now we are, 3,800 companies? It's less than 4,000. It is becoming more and more difficult for companies to go public and stay public because of all these regulations and all that. And then the other, you see a lot of these issuers, funds coming up with the opportunity to say, hey, if you can't make money in public market, here are other ways. So I got pitched by a private credit guy. And I mean, this was the performance document from the funds document. I picked up their NAV, like 7.4% per annum. I mean, I wasn't interested in that. But there were two reasons I think I did mention later on. Someone asked me, did you, ask me some question. I said, I don't want to put my capital in this. Of course, the return is not that exciting. Number two, they had a typo in their funds document. So I wrote back to the CM, like, you may want to get this fixed. You have a typo on every page. Gosh, I don't know. Sometimes these things pisses me off. I know it's a nitpicking, but if you are a fund manager, managing billions of dollars, and your offering document has a typos, that doesn't go well. Anyway, coming back to a private credit, this market is currently red hot. If you see it moved from 375 billion to 2.1 trillion, right? And looks like it's a fancy term for collateralized loan obligations, right? Remember these three letters from 2008, 2009 crisis? Right? You see them, like you call someone as collateralized loan obligations. The word collateralized, brings to mind like a mind damage. Loan is not good. Obligation is like, hey, it sounds like a second payment reminder. So not a good word. So instead of calling CLOs, you call it as it's a private credit, right? Sounds good. It's like you're getting access to something which is very unique, access to something which is accessible only to very elite people, right? It's very private stuff, like a private jet, a private mansion. And credit, you feel good because I'm a credit worthy person. So feel good to be associated with private credit. So anyway, it was just a take on its name, but fees are almost 1.25% on an average, right? And then they'll show you some yield. Always focus on the net yield, not the gross yield. So this particular fund had a gross yield of 16%. But now look at how much fee gets eaten into it. Loan service 1%, management fee 1%, fund admin fee 1%, 3% has been eaten by the fees, and 5% is the loan losses. Net return is 8.49%. Then you have a lock-in periods. Then you have a third party, you have a counterparty risk and all that. If I personally can, invest and manage in SPY, if I had to do nothing else, and that can return me 8% on an average, maybe I'll do there. But it does have a place because many of these private credit, they invest in fixed income securities. So it's the ride is much smoother. If you invest in a stock market, the ride is like this. And you need to have the right set of mentality and a strength in your gut to go through that volatility. And if you do not, then maybe you look at a fixed income instruments, which is like all your debt instruments, and corporate bonds, private credit, treasury bonds, T-bills, CDs, all these are fixed income. Distressed bonds. Right? So these are, one of a way to get exposure. The other way, I would say, if I were really interested in getting exposure to fixed income securities, my fixed income was invested in T-bill and T-notes. Right? Then there are a couple of ETFs. Looks like Janus Henderson has got ETF JAAA, which recently yielded 6.7%, and a BBB sibling of the same. So these AAA ratings, these are the ratings on the bonds. And so AAA is like, you'll never have a default on AAA, right? So if you're getting 6.7% means if the profile of an overall cohort is yielding 6.7%, you'll continue to get that. Then BBB, which means it's like high risk, high reward. That yielded 8.2%. And the fee are much cheaper. So if you are interested in private credit, instead of maybe tying up with one particular fund manager where you don't know what the counterparty risk is, how they're going to manage the risk, many of these funds have a lock-in period. Maybe look at these ETFs. If you want to diversify and move into a little bit of a fixed income. Cool. Questions? Are they considered losses? 8.49? There's nothing guaranteed. But because they are fixed, so the way these guys invest, and I was looking through this fund's description, they basically tie up with other companies like Lending Club, like Prosper. they invest their money with them. I had invested with Lending Club years ago. To start with, yeah, it was like 8%, etc. Then slowly over 3 years later, you're giving me 4%. And I think it was like last year was when I took out my last piece of loan which I had given to them. And I think the last one was like 2023 or 2022. It was a small amount. I just wanted to get through the experience of lending through Lending Club. And they basically become an investor or a source of funds for the Lending Club and the Prosper, etc. JA, BBR, they're like other ETF where you can buy and sell anytime and they calculate daily but pays back monthly. I don't know how they pays back. If you're interested, you may want to look into it. I did not look into the details of them. JAA, Janus Anderson. Yeah, I did not look into the details. Looks to be that case, goes up, then basically they pays the dividend and then start again, pays the dividend, or again pays the dividend, and again pays the dividend end of a month. It's just like that you have this ultra short-term bonds. Pay the dividend, goes down, again it'll capture the dividend accumulating, then again will pay it. I just want to give you a couple of tickers in case if you're interested. All right, next one. Investing opportunity in India. We talked about in session 188 in detail on, I think this was what, July last year, August? I don't recall. Today we are what, 219th, right? So you can go back those many weeks. So we talked about it in detail on why India, and of course that was like almost half an hour just to talk through the details of this. Here just reminding you, we talked about why India is like demographics. We looked at from offshoring, de-risking from China. Then how India is building a digital public infrastructure, layer 0, layer 1, 2, credit, increase of credit in India, availability of credit in India. Generally, if you come from, because I grew up there, taking credit is considered bad. Taking loan is considered bad, right? Very unlike in US. And I got my surprise in US when I moved to US, and then they asked me, I obviously didn't have any credit score, and so you need to take a loan to build a credit score. Why do I need a loan? I manage my finances well. No, that's not how it works in US. Yeah, so I grew up assuming credit is bad, right? Anyway, so now there's a growth of credit. India is also changing, and then the consumerism, and then the energy access. Go back to session 188. We talked about in detail. Today, I'm only going to look at, because I got this nice table, I think in Barron's or Morningstar, the source is Morningstar, on if you are interested, what are the various ways to get an exposure to it sitting in US. So this is India small cap. So first of all, me personally will ignore active ones because they got a lot of, their expense ratios are really high. Then you got, so when it comes to passive, you got a S-min, India small cap, which I guess will be more volatile than the large cap one. You got a Wisdom Tree India earnings, Franklin FTSC, FLIN. My exposure to India is through INDA. I think that's the only ticker that I use for exposure to India. VWO, I would say stay away because it has got India as a part of overall emerging markets. Majority of that allocation will be towards China. And so you won't really get an exposure to, good exposure to India. India will be mixed along with the China and Brazil and South Africa and other countries. So yeah, these are a few tickers. If you want to get exposure to Indian economy, some tickers that you may want to look at. Bobby, J triple A fund mentioned about waivers and without waivers. Do you know what does this mean? I have no idea. Bobby, I never invested into a private credit, so I don't know. Maybe I'll take this as a question and we'll come back next week to find first. I'll find out what does this actually mean. Cool. All right, leverage funds. This is the question that I've gotten like multiple times. Why not invest in these leverage funds like 2x, 3x, 1.5x, or negative 2x, negative 3x? And I've been like repeating the same tone. Now I'm tired of parroting my narrative around leverage funds. You guys know what my outlook towards this is. These are not something that you can buy and hold. These are for specific purposes, very short term, to hedge a particular event or hedge your portfolio for overnight, maybe a day or two, max a week. Don't buy and hold leveraged QQQ, 3x QQQ, and hold it for 6 months. The QQQ may be higher at the end of 6 months. You may still lose money. Okay, so good thing was I happened to, on my one of my walks, I happened to listen to a podcast where the guest was Ed. Okay, don't ask me to pronounce the second name. So who is that? He's a managing director and head of sales and distribution and head of alternative investment from Direction. So prior to the podcast, I thought this was like Direction, some French name. So he said, no, it is Direction. So now I'll correct myself. It's not Direction, it says Direction. Okay. Now, who is Direction? Direction is if you are investing in leverage funds, you would know it. They are one of the biggest issuers of all these leverage funds, right? So they know a lot more about this space than anyone in the world. Right? They have a individual single stock leverage funds. Apple Bull 2x, Amazon Bull 2x, Bear 1x, whatever. This must be Microsoft, Alphabet 2x, right? And then they've got a market cap, S&P 1x, 2x, 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 right? So if you are interested in leverage funds, you would have dealt with Direction because they are the biggest players. So then I thought maybe this guy would know what's the right way to interact with these, right? So some excerpt from its interview. If you want to listen to an interview, this is the link. Okay, I'll share this with you. So what's appropriate time? Is it less than 30 days? Is it less than a week? Is it a week? How should people think about before they dare press the buy order? That's the interviewer's asking. So Ed, well, first of all, they'll track for any given single day. Yeah, because all of them have a daily balances. But after one day, then there is going to be a compounding, which you're referencing. So tell me what the trend is going to be for the underlying index or a single stock that you want to look at. And if it is stepping in a direction, the leverage will be a tailwind, right? If it continues to go high, you're gonna make tons of money, which is what attracts a lot of individual retail investors. Vice versa, if it is choppy market or going against you, leverage will definitely work against you. These are short-term trading vehicles. They are not designed to buy and hold vehicles. Okay. Now you heard it from horse's mouth. If you didn't believe me, finally there is someone who is responsible for selling these instruments, is telling you clearly, not designed for buy and hold. Okay. You need to see what's going on with that underlying index and what's happening right then and there. Right. Unfortunately, you and I, we can't track it on a daily basis. Guys, we got other jobs to do. So unless you're a full-time trader on it and can look at into what's happening on a day-to-day basis, you have no business to buy and hold these things. Forget about 3x returns, how attractive it may look like. And is the trend going to continue, whether next day or day after? Today, you made 2x, great. Is it going to continue? And that's why you really need to look at day-to-day basis. Okay. Where else? Another excerpt I took was one of the questions that I get from listeners is over the past 5 years, because there are a lot of retail investors came into the market over the past 5 years. And they say, yeah, I get the decay thing, but I'm young. I have time. I can sit on my hands through 80% crash. I've invested in crypto or whatever. If I'm just going to put 10 to 20% of my portfolio in 2 or 3 times S&P and NASDAQ, and I'm going to hold it for long term, I think it's going to work in my favor. Right? I have a risk capability. I go and buy Dogecoin. Right? And I'm young. If I understand it's a drawdown because of a compounding, if it is a market volatile, it's going to work in my favor long term anyway, because long term market goes up. Right? What do you say to those people who look at it in this way? You can dismiss me as a boomer, but what do you say to those people who have invested in crypto? Are they looking at in the more buy and hold kind of framework? What do you say to them who wants to use product in this way? Okay, so what Ed has to say is, I won't recommend it because you just can't times over time, whatever leverage point you're using. That's a false narrative. Odds are the longer you're going to hold these, there's going to be some level of decay. There will be periods of time where if something steps up, you may get more of the magnitude of that leverage points. I mean, if you bought 3x, you'll probably get 3x. More often than not, the longer you hold, unless something goes straight up or down for infinite period of time, most markets don't work that way. Markets are choppy. So even after a year, S&P is still up, you might still lose money because markets are choppy. They don't go up in straight line, they go up like this. And that's where these leverage funds kill you. And as a result of that choppiness, the compounding could be adverse to you. So that's why I don't recommend that these should be looked at from a long-term basis. Again, viewed from day to day. Okay, market trends change. And if you're not a trader or not an active trader, these are not appropriate vehicles for you. Okay, you really can't look at holding this for a year or two. That's not what they designed it for. Okay, I rest my case, guys. That's it. That's all I have to say. Hopefully it addresses all your questions. Now you heard from the person who are responsible for selling these instruments, coming and telling you, unless you are a very active day-to-day trader, you can monitor on daily basis. You have no business to be in this. And I hear people who are like coming new to stock market and say, should I buy these leverage funds? No, you should not. Now you know. Now you heard from the horse's mouth. Okay. So hopefully no more questions on should I buy whatever, the FAZ, FAS, or whatever this TSLL or whatever TILL. I don't know. There are some Teslas ones.
One more point, Vivek.
Yeah.
This is a leverage fund. It is just like using the margin. So if you are paying margin interest on these products, they are deducting money from your account every day in and day out. So that's the other point that everybody needs to keep in mind. I have tried this before and I did not think it was worth it. And if the long-term investors are looking into this, they come with the idea that the leverage funds are not good for your portfolio altogether.
Yeah, Shri, I agree. I mean, they have a place and they were created to be held for a day or two. So let's make sure you hold it for a day or two. And let's say we have a FOMC coming up, and I want to hedge my risk on whatever Jerome Powell might say. I may buy some inverse QQQ 2x to hold it over a day. And if it was like what happened on this week, yeah, I'll take some loss on it, but my rest of the portfolio worked fine. Yeah, for a day, sure. But you are right. Agree that long term just doesn't work. And at least Ed, whose job is to sell this, was very open and frank and say for retail investors, no, don't hold it. Don't do this. That despite you might see on whatever YouTube or whatever talking about how you make 1000% on these leveraged ETFs. Oh, I think all that is crap. Are there leverage tools that emphasize direction of market, not just emphasize movement of market, but for instance, prefer up move versus down move? I'm not sure exactly what the question is. There are up as well as down ETFs, because you'll have an inverse leveraged and you have a leveraged funds. So basically, leverage, we call it inverse leverage, means if the market goes down, they benefit.
No,
Sorry.
no, let me explain. You're talking about emphasize the move, like 2x the market up or down, or negative 2x the market. But what if we just is the tool that will only react more to the, let's say you believe the stock market will go up, so you want only the up moves to be emphasized, to be 2x, the down moves to be not to be affected as much.
Oh, no, I mean, you can't have your cake and eat it too.
I mean, I would think with options, there's a way to
No,
choose the direction.
oh, so using options, let's say you can create a trades in which you're gonna make if it goes up, and you're not gonna lose anything if it goes down. I think last week we shared how you can create the stuff on SPY, but then what do you call, there's no free lunch, so what you end up paying is you end up capping your upside. So there are funds that allow you to make money if it goes higher and not lose anything, but the cost that you pay is an opportunity cost of not making, let's say you make money only up to a certain amount of time. I think last week when I looked at, it was a case of you hold SPY and you go and sell a call on SPY or January 26, you're gonna make 10%. And you buy a put at the money, means you have a zero risk. But means by till Jan, you're gonna make only 10%, not more than that. And I'm sure there are funds related to this. There are annuities that are related to this, which probably are called buffer funds or 100% downside protection ETF or funds. So there are those things which are available. I hope that answers the questions. In fact, I think that's where the discussion started from. I read about the 100% downside protection, and then I said, okay, let's talk about it. And of course, they were charging whatever 150 basis points. I'll do it myself, because options, you can create it yourself. If the bias is correct, you made really good. You made some, yeah, the bias has to be. If I have a crystal ball, I will all day I'll buy leverage funds. But unfortunately, I don't. Cool. All right, let's get into some earnings. Maybe we'll do one or two. We just hit our 2-hour mark. All right, thanks, Anthony, for joining today. All right, let's start with Melly. And the reason is because that's my biggest position. So I have to track it every quarter to quarter, right? So Mercado Libre, there we go. There we go. Oops. So headline numbers. Revenue up 43%, gross profit up 32%, margins a little bit down, operating income up 55%, EPS up 71%. Right? So overall, I would say this company continues to just execute quarter after quarter. Does anyone need introduction to the company? I mean, I've been talking about it every quarter now for 4 years. I guess most of you already know about it by now. All right, good. Okay, so I don't have to get into the detail of the company. Looking at their comparison, I mean, there is nothing that I don't like it. Gross profit up nicely, gross margins are above like 50% with an e-commerce company with you and having 50% and 12% mid-teens of gross margins. I would say that's a fairly good business. And these are mostly e-commerce and payment company, right? Like looking at Amazon. Amazon margins are much thinner when it comes to the retail side of ops. Amazon has got AWS, which pushes up the margin, but Mercado Libre doesn't have a AWS equivalent. Business metrics all look good. Gross, GMV, merchandise volume up 20%. Total payment volume up 10%, $40 billion of payments. 2 billion of our payment transactions happened. So I think I didn't see anything which is like concerning to me. Now, some of these the numbers have been helped, and this is where the fun starts, by the reporting updates, right? Now, there is a way in which they change how they report certain things. For example, the interest income is now become a part of your operating income. And so is the interest expense, and not to be considered under like other income, etc. So whatever you're seeing as operating income has been impacted from as compared to previous quarters by this reclassification. Similarly, other big reclassification that they did was to Mercado Envios, in which now the company has become a principal, means instead of just taking the net as a revenue, which they used to get when they were just an agent, now the revenue is booked on a gross basis, right? So these are the two things that they did. And now if you consider the impact of these two things, the growth would have been 30% in revenue instead of 36%, and operating income would have grown at 44% instead of currently showing as 26%. So for me, I'm not too concerned about it. I think if this is the right way, if this is how they're operating the business, then they should report the metrics accordingly. Right? What I didn't like in this report is the metrics that they're not reporting anymore. They didn't report the TPV on or off, the breakup of total payment volume, how much is happening on Mercado Libre properties versus off it. This was a very important metric for me to understand the adoption of its payment system outside its own companies. If it becomes a standard way of paying, doesn't matter, are you on Mercado Libre? Are you in a shop? Are you on xyz.com? So earlier, I was very bullish looking the TPV off growing. Now the number has disappeared. I don't like that. I don't like management when they suddenly stop reporting the metrics without telling me the reason of why they're not showing it. So number two, they didn't report how many total active users are. Ad revenue I was able to find it. So they do report what's the e-commerce user and fintech users were, but I want to know what the overall active users were. They have been reporting it every quarter, but I saw this missing. So that's my gripe against management. Am I gonna ding against them? Not too much, but something if to take care of, because generally management will stop reporting numbers if they don't look good. And that would be my concern. Capital allocation, nothing changed, no share repurchase, no dividend. Some of the management commentary. It's been in business for 25 years. I did not know that. But that's good. A unique active buyers going 25% year over year in Mexico, 18% in Brazil. These are the two growth countries that it has. They launched split payments, means ability to pay via using two payment forms in Brazil and Mexico. Good traction with Malay Plus, which is equivalent to Amazon Prime. Difficult time in Argentina. Shouldn't be surprised. Argentine economy, currency is in shambles. So even though their GMV grew 214%, FX neutral, dollar terms, it declined by 28%. This is how your purchasing power is robbed. Even though you made 214% more income, but you were not able to afford, you were basically had to do with 30% less food. Trying to, compare that. Revenue grew 239% forex neutral. Dollar revenue declined by 22%. But thankfully, Brazil and Mexico helped them to increase the overall revenue by 36%. Okay. So Argentina, the main concerning thing is this. Fine, you don't control foreign exchange rates. You don't control currency. That's controlled by Argentinian government. Why your items sold decreased by 4%? Something that I need to watch out for. Other than that, I guess, yeah, everything else is fine. All the trends look good. I have no other concerns. So stock was up 9% because, they beat expectation both top line and bottom line. My conclusion is headwinds in Argentina, not concerned about revenue, but this I already talked about. I talked about that they stopped reporting metrics. Reporting changes, we'll see how it impact long term, but I think it's the right way. And yeah, I'm going to hold my stock and probably just sell premium against it. And I know in 24, all the analysts, they updated their price target to close to 2000. But that doesn't mean anything to me. I mean, the business still looks fine. So that's Mercado Libre. Any questions on Melly? Cool, good. All right, let's jump on to the next one.
Vivekji, is there any, for example, if you want to add Melee here, is it something it's a good time to add? Because it's already I gave the good results, right? And also the from the all-time high, it is lower also. So we can develop that from something here.
If you want to hold it for next 10 years, yeah. I think this company is still less than $100 billion company. It's $82 billion company. And it is still growing like crazy in the market. But you're saying, hey, next 6 months, can I hold this? I have no idea what's going to happen in the next 6 months to the stock. I don't track stock to stock basis. I'll track business to business. And I think it is still got a lot of a runway to grow long term.
Mm-hmm.
So yeah, if your outlook is 10 years, I think it's still a good price to get in at 10 years.
Okay, yeah. Yeah, I did like just before PR, but so before year, I closed it to the profit. Then I entered again in the down
I
actually.
did the mistake with Mali. I first bought at 350. I sold some at I think after quarterly results at 500 or 600. I'm like, oh, it's too much. But that time I wasn't like well-informed investor. I was also learning. So it's a part of a learning curve. Yeah, I've done my share of mistakes. So for me, I'm gonna hold it, I guess, forever.
Okay, interesting. Thank you.
And market will present opportunities. So in fact, if you go back to, I think I added it to when it was like 1400 or 1300, and I come and share, I picked up, obviously it's a big ticker, big dollar amount ticker. I'm like, I picked up, I think 1 or 2 or 3 shares in last month when the share was down to 1300, 1400 somewhere. Market gives opportunity. I think the business is still fine, and I have a patience to hold it for next 10 years. So why not? So that was Mercado Libre. Let's move on to.
And what's your average price at this time?
Right now, my average price will be, I think, 1,000.
Okay.
Because I started at 350, I sold it, and then I bought it. I've also bought it at 1900.
Okay.
So yeah, so I guess I have bought it at like, yeah. First I started at 350, right? Starting my initial position. And then 1,000. And I also bought it at 1900. Probably I've not taken note of here of my buy, but yeah, I bought it at 1900 also. At that time, I didn't realize, and that's how you learn as an investor, the whole market was overvalued. But business looked good. User, GMV, payment volume, financials, everything looked good. So I have no reason to doubt that the business, the company is bad. And the company was still good, just that the overall market was overvalued. So I look at every quarter and see what I need to do. And I've been bullish for all, it's 5-6 years. Okay. What do you want to look at? Let's look at Apple.
Something is really great on you. Like, and it's you see the 1900s and going to 900, something like that, and you're still holding it. That is a great hold. Like, you have such a great.
No, because my idea was, guys, I'm not buying it for next 2 years. So this was not sponsoring my daughter's college fund. If it was, I would have sold it. I would have gotten panicked at from 1900 to 1200. I would have gotten panicked, or 900. I would have sold it. Let's look at Apple. How is the premium price for selling puts? Premium is good. It's a difficult stock to sell premium against because the bid and ask spread is wide. So it's not easy to sell premium against this. To be frank, I've been trying to do it. I think I'm not happy. This is not the best instrument, the best stock that I have for cost basis reduction. It's difficult. And then if you have to roll it, is even worse. So go into Melly if you really want to kind of marry the stock for long. Okay, and you love the traits of Melly because reducing cost basis is not easy in this particular stock. Why am you can just look at it, right? Even though I almost sell it, every expiration period, because I gotta do what I gotta do. Look at this. It's always almost $4 to $5 wide at the money. So it's not a easy stock to, if you have to roll or you have to manage your trades, it's not that easy because of the wide bid-ask spread. Let's talk about Apple. Looking at the results, we wouldn't think that the Apple would be up like whatever 8%. Revenue was down 4%, guys. Revenue is down. Operating income is down. Net income is down. But the expectations were even worse. Revenue, basically, I think there are 2 things that push the stock up. The best is $110 billion of stock buyback. That's it. If you want to talk about Apple earnings, you only need to know $110 billion of share buyback and ignore everything else. This is the only reason why the stock moved the way it moved. Okay. Now, because Berkshire Hathaway annual meeting is going on, and before the session, I came to know that Berkshire has sold 13% of its Apple holdings. So I don't know if this buyback was just to preempt the negative reaction or whatever. We'll get to know the stock reaction on Monday. But from Apple's own perspective, is their EPS, they had a good, was a March quarter record. They had a revenue record in many countries. Overall revenue declined, but some of these emerging markets, Apple is starting to gain traction, and its own record. So probably starting with a lower base. In record revenue and services, which is Apple's second act, right? First act is your iPhone. What's your second act? iPhone is maturing. You need to have your companies continue, your act one, act two, otherwise you reach your maturity phase, then you reach a declining phase. So not a great picture. If you look at your revenue and the gross profit, most of things are negative. Business segment wise, Greater China, it was negative 8%. Even though I think the Tim Cook came and told that in the mainland China, they've done better. They are their best, not. They said, I think there was some polling done in which iPhone is still the most preferred phone, whatever. So guidance is June quarter will grow single digit year over year. Services will grow double digits. So let's look at services. That's the two things are the only good things. One is services grew 14%. And this is, I think, I was talking about for now, almost now 2 years, their Act 2 services. Keep an eye on services. That's going to bring in all the margins that Apple need. Mac was a surprise for me, but these are the only two areas which actually worked well for Apple. So 8.5% jump. I don't know that it really deserves it. The expectations were very low. Expectations were that they're going to lose 20% less. They're going to do 20% less revenue in China. They came down only 8% less. So yeah, great. Great as compared to what the expectation was going in. But if you look at it absolute basis, come on, guys, this company is not growing. They're not growing the revenue, right? So anyway, but if you buy 110 billion of shares, who cares? And then they increase their dividend. Anyway, so I'll give you my bullish or bearish thesis. So bearish thesis, it's only iPhone story, guys. Nothing has changed after iPhone. They haven't done any good innovation after iPhone. Vision Pro is dud. I don't know. I don't think we could call it as a dud, but they don't talk about it anymore. Car project is done and dusted. Getting tough competition from Huawei and Xiaomi in China. Revenue has been declining for past 5 out of 6 quarters. PE is 27. Currently, it's too expensive for a company with a declining revenue base. Yeah, you growing your revenue gangbusters, I'll be willing to pay you expensive valuation, right? So the question, what's next for the company? So that's, if you want to be bearish, that's your thesis. Bullish side, it generates cash like no one else. It has got damn $100 billion free cash flow. That's like a GDP, more than the GDP of many companies. $100 billion free cash flow, not a revenue, free cash flow that they can use to do whatever they want to do. AI tailwind is yet to arrive. Everyone may be excited about Apple will come up with iPhone 16 with a native AI agent. There we go. Everyone would want to upgrade. So wait for WWDC in June. Don't write this off just now. Apple can make iPhone AI enabled, and then Apple is the only company in a unique position to use other companies' product and have other company pay to them. Like Google search. Google pays $20 billion to Apple every year. So that Google search is available on Apple iPhone. They could do the similar stuff for AI. Probably they are running an auction between OpenAI and Anthropic and Gemini to see who can pay the more money, and they'll probably use theirs LLM. No, I'm just guessing, but Apple is known to do that. Like they got a 3 billion users on their devices. They have full control on hardware and software, which gives it edge over Google. Google controls only Android. They don't control the hardware. Still the most desirable phone in the world. We're seeing that they're developing, as and when they're developing the phones at the right price point, people still want Apple. They may not be able to afford it, but if they're able to afford it, they would rather go for Apple than any other phones. And services is their Act 2.0 for Apple. You ask me what's after iPhone? They got a services, right? So you decide. I'm not going to bet against the power of cash machine. This is me personally, okay? Future is uncertain, so I will de-risk by selling covered calls. And if it fails, if it falls a lot, like 160, I'll be willing to pick up some more. But it generates huge amount of cash. If it's 160, there will be P become cheaper. I may be able to pick up more, but I'm not going to bet against it and either sell my holdings or go short on Apple. That's my case on Apple. So now you can update it, stock up, what, 8%. All right. So the reason I note this down is to keep me sane. If I have someday I suddenly think, okay, I want to sell it, I'll go back and see, what did I say after this earnings? Is it just emotions playing out? So I put down the stuff so that I don't get carried away by my emotions. All right, let's done with Apple. I guess last is okay. Let's spend 10 minutes in any Q&A. Otherwise, I will skip the other two. Already 20 minutes over. Any other question? Oh, Apple AI is in works. Going to read during the yeah, exactly. I'm like, don't write it off. There's a lot of hope riding on Apple to talk about AI. I mean, Tim Cook actually dropped a lot of AI words in this quarterly earning release, more than what I was expecting him to. But I guess we have to see how they integrate AI into their products. And that's going to be a tailwind. Again, iPhone is still big, right? Just like you can't write off 3.4 billion people using Meta platforms products. You just can't write off more than 2 billion computers in people's pocket around the world. That real estate, not the real estate, the time people spend on those devices is very, very important. Yeah, I know revenue has not been growing, but and I like that if they don't find a good growth area, he's returning capital back to shareholders rather than trying to diversify, right? Not diversify. The word I use, rather than trying to diversify, DEWORSIFI. It is better to, just return the capital. Other CEOs may want to expand their influence. I'm happy that Tim Cook doesn't want to expand influence and say, hey, if I don't have a core competency, I'm not going to go and buy into unrelated business. A message I followed from Madman is buy, don't trade Apple. Any idea what could be the fair price after buyback? I have no idea. So I have to be comfortable with whatever market gives. Cool. But we'll see what happens on Monday, because now we know that Berkshire Hathaway has sold. some Apple. Let's see, Berkshire Hathaway, Apple sale. Yeah, 13%. Yeah, I heard that right. And Berkshire Hathaway's now cash pile is like $180 billion. Yeah, this is for tax purpose. Again, I've not got into the details. I was doing dishes in the morning, and on the side, Berkshire, CNBC was live streaming this one. So yeah, I'll read it later. I didn't have it. So maybe next week we'll talk about that stuff from Berkshire Hathaway meeting. There's always a treasure trove of information. I'll have to go through, I'll basically listen to the recording, and then I have to put down, all my thoughts. That was in the last quarter. It doesn't matter now. Yeah, but the market only came to know now, right? Market did not, or was it evident in the 13F filing? Is it the same one which they did in 13F? Then we already knew. I know there was some sale that Berkshire Hathaway had done, and they revealed in the 13F. But I don't know, whatever he talked today is different. Cool. Alrighty. I'm hungry to go out for lunch. So if there are no questions, why you didn't take any BRKB? I have. It may not be my top 15 yet. BRKB, it didn't show up in my top 15. So let me go back and look at what. Come on. BRKB is, I do hold BRKB in my portfolio. I started it very late. Again, everyone goes through the hype cycle. You try a few different things, figure out what works for you or not. BRKB is my 13th number position. So it should have been there. It's my number 13. So it will be in top 15. Yes. Rajiv says, I've sometimes wondered how many tickets is too many to manage. You likely have a couple dozen other tickets because top 15 going by our pizza. Yeah, so there are a few tickets which are like a dust. I don't worry about it. Then there are a few which are ETFs, so don't have to manage them. But you're right. Those who've been around would know. And this is where sometimes things get crazy, right? And again, it's a part of a learning. You all learn. At some part of a time, in the height of 2020, I ended up 110 plus tickers for me. And then I'm like, what the heck I'm doing? And of course, it was a COVID and I had just lost my job. I was like, okay, I want to focus on this one. And then I got back into the job market. I'm like, I need to clean up my portfolio. 2022, I spent in cleaning up my portfolio. Thankful that I did that, because then I got rid of, I think 2021 and 22, I got rid of a lot of stocks that I had no business why I got into it. I never tracked their earnings, etc. You can't do it if you have 110 tickers, right? So I cleaned up a lot of my portfolio. Now overall, I still have 67 tickers, but I would say 15 of them are like dust, means less than 0.5%. So those are like lottery tickets, like NanoX, like things like that. So I don't care. Then there will be maybe, 8 or 10 tickers, which will be your ETFs. I don't have to track them quarter to quarter basis anyway. And then the rest will be, I'm willing to hold. And that's why nowadays I'm very cautious of adding any more ticker. I'm focused on reducing the number of tickers rather than adding. So that's why I'm like, you bring a new stock, I'll review it, but I don't think I'll be adding anything to my portfolio. yeah, it becomes too much. Harder to have options play if I chase tickers. Not sure. Speaking of Nanox, do you sell options against to lower cost basis? Yes, I do. I mean, as long as it has options available and Nanox, yes, I've been doing it. And again, thesis on Nanox is it is either it's going to go down to zero, or it's if it works out, it will give a handsome return, right? It's like these are like lottery tickets, and you don't put your big amount of money in lottery tickets. So Nanox is like 0.5% of my portfolio, and if I'm right now, I'm looking at I bought Nanox at average buy price is $30. My current cost basis is $17. And yes, so I still have to reduce it. I want to get it close to, $10. But now the stock itself is like single digits, so not too much of a premium left. So when it was trading in mid 20s, etc., or like 40s, there was a huge amount of a premium, and I was able to reduce the cost basis. But yeah, we'll do slowly and steadily. Cool. All righty.
Vivek, one question actually, just on the Nano X, and you said like $30 you bought and $17, and what's the current price? But if you're selling this star like options on it, it is because if by any reason if it goes up and if it gets sold, right, then we'll be in loss, right? That's a risk is always there, right?
So when I will talk okay, so maybe I'll cover in a separate one in terms of when you sell calls.
Mhm.
Okay, let me say. So the way I structure is like this. If I'm selling calls on Anox, the reason why I'm not been able to reduce cost basis so much is I'm not selling against all my position. So if I own, say, 200 shares of Nanox, I'm gonna sell only one covered call.
Okay.
Because the stock could be volatile and it go to the moon, I don't want to be left out. Or instead of selling a call, I'll maybe sell a call spread. So those are the strategies that I will adjust depending on how bullish or bearish I am. So in case of an Nanox, right now, I have only one covered call.
Okay.
And I
Because
don't
I'm
own
in the
more than
same
100 shares.
situation for the Tesla, sir, because I bought it 300 plus on that one. If I do any changes, right, but I will be selling at 170 or $180 or maybe 210 from the current price. It doesn't make sense, right? That's where I feel I asked the question. Yeah.
No. So yeah, so or you can wait and do nothing, and then what if Tesla doesn't recover? So you don't know what's going to happen in future. I don't know what's going to happen in future. I'm bullish on Nanox, that's why I'm holding it, but I don't know when they will be able to
Answer.
right now the existential threat is over because they got FDA approval. Now they have to execute it. But execution itself takes a lot of time. I don't know how long it will take them. So in Tesla, I mean, I own Tesla. I started building position in Tesla in 2023. And I started, the moment I had 50 shares, I started selling call spread against it. Don't sell call, maybe sell a call spread. And look at your P&L to see if my call spread is completely in the money, is my overall Tesla position profitable or not profitable? I think that the problem becomes when we become too greedy and say, I have an opportunity loss, hence I'm not going to do it. Yeah, you had an opportunity loss, but you still made money. Instead of making 4,000, you're going to make only 3,000. Are you okay with making only 3,000? Or you don't want to do anything and then hope and pray that Tesla goes up? I take the side of maybe instead of 4,000, I'll make it 3,000. Let me sell a call spread.
Yeah, another problem for me on the Tesla, maybe Nanox, this kind of the growth stocks, right? The problem is on the speculative growth mix actually. For them is that it goes suddenly up, suddenly down, right? Then we are gone. Like whatever we think, that
That's
goes
why
up.
get paid the premium. Otherwise, the premium won't be as high. That's why Tesla is the most traded optionable ticker, because it is a little more volatile than the normal stocks. And that's why the premium is high. There is no free lunch.
But you should sell it. That's it's not a bad idea to sell a cover like a spread.
Yeah, sell a spread. Sell a spread. Plot it in your P&L diagram, analyze tab of the income and see at the end of a day, you might still be making money.
Mm. And this should be again 30 days period or something, 60 day. What is that normal period you?
I generally, right now, if I'm doing anything, I'm opening new trade for June expirations.
June expiration. Okay.
Yeah. I actually had a 180 and I think 200 call spread, which is still active. So Friday, I sold a put spread against it because now it is like kind of in the money. I'm trying to manage it. And even if it is, it goes in the money, that's fine. I'll maybe sell a few shares, which I bought at lower price. So, but I'll still sell premium. Over long term, premium selling has worked out for me. One or, you might look at a few expiration and say, oh, I lost money in this one. Now, looking at my 8 years, premium selling has worked out for me.
Yeah. Very
Cool.
interesting.
All right, guys, I
Thank you.
gotta go. So thank you very much for joining today. I'll see some of you on Wednesday. Send me your homework and so that I can comment and respond to you before the Wednesday session. All right, cool. Thank you. Bye-bye.
Thanks a lot, Vivekji.